Hey guys, welcome back to my channel McNallie Money, home of all things stock, investment, and personal finance related. Now for today's video, we're going to be taking a look at a company that operates in the Canadian MJ space. It's a mid-cap company in terms of size, and it's actually named OrganiGram. So what's interesting about this company is they just came out with Q2 results, which were honestly a little bit mixed, and they've had some big announcements in the last couple of months. So if you're looking for exposure in this industry here in Canada, you may be able to jump in on OrganiGram at some reduced prices based on this latest earnings release. Now, if you're not already subscribed to the channel, please take a second to do so and take a minute to like this video. It really does help me out in terms of growing my channel and pushing this content to other people like yourself who may find value. In addition to that, feel free to leave a comment in the section below on what you think of OrganiGram's business model, if you currently hold shares, and what you think about their Q2 numbers that we're going to go through in this presentation. Now without further ado, let's roll the intro clip and get into today's video. Okay guys, so that's right. Today we're going to be talking about OrganiGram Holdings. Now this is another Canadian company focused on the MJ sector, but the thing that's interesting here is this is kind of a mid-cap. So we've talked about some of the small caps on the channel over the last couple of months. We've also compared those to some of the large caps being Canopy, Aurora, Afria. OrganiGram kind of sits in the middle of those two realms with a market cap of just over 750 million Canadian. So as of close on Friday here, April 23rd, the company was sitting at 264 Canadian. They trade under the ticker symbol OGI. Now on Friday, they had a pretty solid move. They were up just about 5% or 12 cents a share. And you can see this company has really had an interesting chart over the last 6 months. So they have been on a relatively bullish run. They're up from about $1.20, $1.10 range in November of 2020. They're now sitting at double that price. We did see that strength in early February that we saw in the sector overall. So OrganiGram actually ran up to over $6 on an intraday high. Now they pulled back considerably. They were down to about the 268 range, so where they're sitting now in March. And then they had a really good run again in the first half of March. So as of March 12th, we saw them close at over $4.44. So pretty good momentum in early March, but we've seen that continually drop off over the last few months here. And the big reason for that was Q2 results, which they reported on April 13th. Now Q2 for this company came in pretty poorly across the board. Revenue, margins, EBITDA were all struggling in the past quarter here. We're going to talk about that earnings report at the end of the video, but I wanted to give you guys a heads up, and I think it's a good time to talk about OrganiGram because they have seen some weakness from those earnings, and it may be a good time to enter this name if you're looking for more exposure in Canada in a company that's maybe a little bit more established or a little bit safer than some of those small cap penny stocks we've been looking at over the last few weeks. Now if we pull out to a 1-year chart here, you can see its long-term trend is relatively flat. They were trading about that $2 price point in June of 2020. And if we look at a 5-year chart, you can see all the way back in June of 2019, this company was well above $6. So there's no doubt OrganiGram has struggled and had a few stumbles over the last couple of years. But again, it may be a good opportunity to get into this name at a discount if this is a company that you're looking to hold moving forward. Now, in terms of what OrganiGram Holdings actually does, that's actually the parent company of OrganiGram Inc. and of the Edibles and Infusions Corporation. So OrganiGram's holding is kind of the umbrella company, and these two other companies or subsidiaries are kind of nested under that holdings banner. This company was founded in 2013, which makes them relatively old and experienced in the Canadian MJ space. They first started out as a medical MJ provider, but today the company is focused on producing high quality indoor grown MJ for patients and for the adult use recreational side of things here in Canada. As well, they're developing international business partnerships to extend to countries such as Israel and Australia, which is exciting to see. Now, OrganiGram has developed a pretty broad and pretty impressive, to be honest, portfolio of brands currently available to the public. So those brands include Edison MJ Company, Indie, Bag o' Buds, Shred, and Trailblazer. Now we're going to look at those in a little bit more detail in a second here, but they are really focused on kind of the mid to entry level MJ market, which is interesting to compare to some of the companies like G-Tech, for example, that's really going after that premium hand curated product or high end side of the market. Now OrganiGram's facilities are located in Moncton, New Brunswick, and they've actually just added a manufacturing facility or location in Winnipeg, Manitoba as well. So again, kind of interesting to contrast that to some of the West Coast providers or producers that we've looked at over the last few months. And we're going to actually talk about some of those differences or things that make OrganiGram unique as the presentation moves on here. So these are the big 5 brands that we just mentioned on the previous slide. So these are all focused on the adult use recreational side of the market, and they've actually had really good traction in terms of being searched on the Ontario MJ Store website, which is currently the most active and largest province or market by population in Canada. So the Shred brand was actually the #1 most searched product or brand name on the Ontario MJ website in the last 5 months. So it held that title in November, December of 2020, and also in January, February, and March of 2021. Now the Shred, Trailblazer, and Bag o' Buds brands are all focused on the value segment within the MJ market, whereas the Indie and Edison MJ Co. are focused more on the mainstream price segment. Now, in terms of the actual available formats or what these brands offer their customers, all 5 brands are available in a flower offering. However, Shred is also available in pre-rolled joints or multi-packs, along with Trailblazer, which also offers vape pens and chocolates, and Edison, which actually offers the widest variety of products. They also have pre-rolled joints, chocolates, truffles, oils, and vape pens. So this is kind of the more, again, mainstream product offering, with some of these focused on the more bulk kind of value propositions in terms of where they stack up in the MJ market. Now down here you can see there's some attributes they use to describe each brand, which really range from good THC potency, good price, good taste, good value, and then as you move up the stack here you can see a more curated lineup of indica, potent and flavorful strains, unparalleled MJ genetics. So they really do offer a wide variety of price points, experiences, and products, which I thought was interesting. And this again, we've seen with a lot of these MJ companies is they really try and have a number of different product offerings or brands under their portfolio, and that allows them to target all different areas of the MJ customer base because people are very unique and they really do have different buying habits within this industry. So if we take a step back now and we look at OrganiGram overall, so not just their brand portfolio, but the company from kind of a bird's eye view, you can see they call out 6 distinct points here on this slide. So #1, leading licensed producer or LP of quality products for medical and adult use recreational markets here in Canada, which we've already talked about. They've got a very unique 3-level indoor approach to cultivation or growing. We're actually going to take a closer look at this on the next slide, but it really allows them to maximize their space and output at this cultivation facility. They've got 2 different dedicated edibles and derivatives facilities. So one of them's focused again in Moncton and the other in Winnipeg. You can see they produce things like chocolates, vapes. They have CO2 extraction with a plan to build out hydrocarbon extraction as well in Moncton. So again, we've seen this with a lot of these companies, but CO2 extraction really is the most versatile and the most easy to set up of all of the various extraction methods. And then they also have the ability to get into the soft chew and confectionery side of things in the Winnipeg facility. The 4th point here I thought was really impressive and speaks to this brand's history here in Canada. They currently have relationships with all of the provinces, and they're available in 10 out of 10 Canadian provinces. So this is very exciting as a potential investor and something a lot of these companies are really trying to do and get in a position where they can serve all of Canada coast to coast. Now the 5th point is on innovation, and we're actually going to spend some time on this, but they recently received a strategic investment from this BAT company, which is A Better Tomorrow, and they're really looking to collaborate between the 2 companies to drive innovation and product development on the OrganiGram OrganiGram platform. They also talk about emulsification technology and biosynthesis. We're not going to spend a ton of time on that, but it's definitely interesting and something to look at in a little bit more detail if you are looking to get involved with this company or invest a fair amount of money in OrganiGram moving forward. Now, the final point here is on the international side of things. So we talked about their relationship with Israel and Australia in terms of the medical markets, and they're actually looking to expand that footprint and continue to export to more and more countries internationally moving forward. So as promised, this is a closer look at their 3-level indoor cultivation facility in Moncton, New Brunswick. So you can see here they've stacked the plants on top of each other from floor to ceiling, and what this really allows them to do is maximize their footprint. So we talk a lot about square footage in terms of growth facilities, cultivation facilities. This essentially triples that square footage. All of this is obviously climate controlled, and that consistent indoor climate really allows them to produce a consistent flower or end product over and over. They also have the ability to create microclimates within this facility and strain-specific grow rooms that can really differentiate and bring out some of those different flavor profiles and terpenes that we've talked about in some of our other videos. So now that we've seen their actual cultivation grow facility or side of things, I wanted to talk about the edibles and derivatives facility. So this is the one in Moncton, New Brunswick. So it's designed under EU GMP or Good Manufacturing Process certifications. Now the footnote on this, it's not yet certified. So although it was designed and their plan is to get that EU GMP certification, which we've talked about with a lot of other companies in this space, they don't yet have that. Now this is a 56,000 square foot facility, so quite large in terms of these type of buildings. And this is where they actually have that CO2 extraction and the plans for the hydrocarbon extraction moving forward. Now at this location, they focus on vape pen filling and cartridges. They also have an automated packing line and dissolvable powder mixing, which they use in the formulation for other edibles. And at the bottom here, you can see they've actually invested $15 million Canadian in high-speed, high-efficiency, and fully automated production lines for chocolate and packaging. And obviously the goal with this is to drive efficiency at these locations and really push out as many products per square foot as possible, which they do through advanced engineering, robotics, high-speed labeling, and automated carton packing. Now they also call out that chocolate is currently the second largest subcategory in the edible space, so they're really focusing on that niche product moving forward as well. So now that we've talked about OrganiGram's brand portfolio and Moncton facility in a little bit more detail, I wanted to talk about two significant developments that had just happened recently for OrganiGram. So the first is actually this strategic investment from BAT, also known as A Better Tomorrow, and they've actually invested $221 million in OrganiGram to receive a 19.9 or 20% equity interest in the company. Now this does two main things for OrganiGram. Number one, it injects a ton of cash or capital into their business, which they can then use to expand into new markets and upgrade some of their facilities, which we just saw in that last slide. And secondly, it really expands their innovation or their R&D side of things, because this company, A Better Tomorrow, which we're going to look at in a second, is actually a worldwide company that's been around for over 100 years and has over 55,000 employees. So it's a major organization, and they can now harness that expertise at OrganiGram moving forward. Now, if we jump over to the BAT website or A Better Tomorrow, you can see here, this is how they describe their company. We're a leading multi-category consumer goods business. If you scroll down the page here, you can see they were established in 1902. Currently spread across 6 continents, so they operate in the United States of America, Africa, Europe, North Africa, Asia, and the Middle East. And between all their different divisions and subsidiaries and investments, they actually interact with customers over 150 million times per day. Now, this company actually started out in the cigarette space, and they're now working to diversify, obviously as cigarettes become less and less popular, and they really feel like recreational MJ is a good alternative to cigarettes, which is why they've wanted to make the strategic investment in OrganiGram. So this slide really talks about that transaction in a little bit more detail. Here you can see the numbers that we just mentioned, and between the two companies, they've actually decided to form this center of excellence, which is going to be focused on developing or creating the next generation of MJ products intellectual property, and technologies. So again, not only does this investment allow OrganiGram to raise significant capital moving forward, but it actually accelerates and strengthens their ability and their research and development platform moving forward. Now, the other thing I wanted to call out on this slide is they specifically mention entering the United States market. So I think that's very important. Obviously, OrganiGram has a strong hold here in Canada, but as we all know, the United States has a much larger population, and I think over the next couple of years, that's really going to be where a lot of the revenue and profit opportunities in the MJ space arise. So it's great to see that OrganiGram is specifically talking about that in their investor deck. And this slide adds additional detail to this partnership. So you can see on the right here is OrganiGram. They call out leading licensed producer of high quality MJ products, state-of-the-art facilities, experience management in the MJ space, and a track record of consumer-focused innovation. You then have BAT, or A Better Tomorrow, on the left, which again is a leading consumer goods business. They've got sophisticated management, innovative product platforms, deep plant expertise, and deep consumer insights from the scale and size of their organization. And by bringing these two organizations together, BAT and OrganiGram feel like they can really drive some meaningful innovation in this industry that other companies maybe aren't in a position to do. Now, if we jump back to the significant development slide here, the second one OrganiGram calls out is actually their acquisition of the Edibles and Infusions Corporation, which is based in Winnipeg, Manitoba. So this was announced on April 6th, and what this does is actually position OrganiGram to start generating significant revenues from a well-established business that's focused on confectionery and soft chew products. So this company has actually been in operation for nearly 100 years. It's a CPG, or consumer packaged goods company, so they can actually fold this in quite quickly and start driving incremental revenue from this acquisition in the near term here. Now, if we take a look at this facility in a little bit more detail, so Edibles Infusions Corporation, this is the one that's designed to meet EU GMP certification. This is a 51,000 square foot facility, so just slightly smaller than the Moncton location. It's got state-of-the-art equipment, and because this was traditionally a confectionery, this is where OrganiGram's really going to focus on a lot of their soft chews, gummies, toffees, caramels, things of that nature that are really starting to become some of the most popular categories or products in the MJ space. Now, as I was doing my research here, this acquisition of the Edibles and Infusions Corporation by OrganiGram really reminded me of the acquisition of Life that the Valence company just recently did. And it really seems like a lot of these big MJ companies are looking for well-established, pre-existing businesses to step into the edibles space. And it's a lot easier to acquire one of these companies and get their actual expertise, their track record, their facilities all in one go than try and build this stuff from the ground up. So I think this is an opportunity that we'll see moving forward. And I would expect a lot of these MJ companies, as they move into more CPG focused products, are going to start to acquire pre-existing businesses that focus on snacks, treats, edibles, confectionaries, that type of thing, and fold those into their existing MJ business models. So now that we've talked about some of the recent changes at OrganiGram, we've looked at both of their facilities, we've talked about their brand portfolio, I wanted to talk about the numbers here. So first off is the actual Canadian market overall, or the total addressable market for this company. Now keep in mind, they don't operate in the States as of yet. They are looking to expand into the US in the near future, but as of right now, Canada is their total market opportunity. So they call out a few things on this slide that are quite interesting, not only to this company, but as someone who's invested in a number of these Canadian companies in the MJ space, I thought it was worth throwing this slide in the presentation. So this actually shows the growth in retail stores since July of 2020 to April of 2021. So you can see Ontario actually represents the largest portion there with almost 470% growth. Now this really was a problem in the Canadian MJ sector over the last couple of years. Ontario decided to do a lottery type system to allow these retailers to open up. and it was really poorly designed and caused a lot of frustration, and a lot of people were unable to open the locations that they wanted to. Now, Ontario has taken a new approach here, and that's why we're seeing such exponential growth in the number of stores and retail locations in that province. So, that being said, they've actually increased from 102 locations in July of last year to just about 580 locations in April of 2021. Now, similar story across Canada, but to a lesser extent. So we've seen 87% growth nationwide from about 1,000 total locations operating to just under 1,800 here in the last 8 or 9 months. So a lot of new locations are coming online, which is obviously phenomenal for any of the companies that produce these packaged goods, because the more locations they have, the more sales opportunities and consumers are going to see their products. Now on the right hand side here, they really break out the Ontario retail store growth, and you can see that Ontario is now issuing 20 to 30 new store licenses per week, which equates to about 80 to 120 per month. So the growth rate of these locations in Ontario, which is the most populated province in Canada, is absolutely phenomenal right now. Then obviously on top of these impressive growth numbers in Ontario and Canada, you have the massive US market south of the border, and that's why I'm so bullish on this sector overall, you guys, because this is honestly like getting into the alcohol industry right at the end of prohibition, and I think a number of these companies are going to see exponential growth over the next 2 to 3 years, and that's why I want to have a lot of different opportunities or a lot of different investments in this space, because many of these companies are going to absolutely take off, in my opinion. Now that being said, and although I am very bullish on the MJ space overall, OrganiGram definitely has had a tough couple quarters, and you can see this in their Q2 results. So I wanted to include this article from the Motley Fool. It's titled "Why OrganiGram's Q2 Results Were So Ugly," but a lot of investors and a lot of analysts were really upset with their most recent filing here, which came out again on April 13th. So I wanted to talk about the numbers, but again, this may be seen as a really good buying opportunity if you're looking to get into this company moving forward. So this article talks about OrganiGram's poor stock performance in 2020. It then talks about how the company's been on fire in 2021. They saw those big spikes in February that we talked about at the open here. But then in terms of Q2, they call out a number of concerning factors. And we're going to look at the actual earnings report in a second here, but the most concerning to investors was actually this 29% year over year decline in top line revenue. So this is the actual earnings release here. So you can see there was some good news. They've launched 62 new SKUs since July 2020. Shred was the #1 most searched brand on the Ontario MJ store, which we mentioned. They had their collaboration with BAT and that $221 million cash injection. That allowed them to pay off a number of credit facilities or loans that they currently had outstanding. And then on April 6th, they announced the acquisition of the EIC company. So there was some silver lining to this report, but as you scroll down, you can see where the analysts and investors really found concern. So in terms of revenue, this is where they saw that 29% year over year decrease. Now revenue came in just north of $19 million. So not too shabby, but if you look at this company's market cap and you look at some of the other numbers that smaller cap companies like Tilt and Valens have been posting, $19 million for a $750 million market cap company is definitely not great, especially if you're seeing that number decline year over year. Now, the company attributes this to significantly lower wholesale revenue and lower average selling price in Q2 of 2021. So this is something I've talked about in a lot of my videos, but I really feel like growers or cultivators in the MJ space are going to start to see their margins and their revenue squeezed as more and more people come into the space and as competition continues to increase. Now that's one thing that's really frightening for me as an investor in a lot of these Canadian companies is when the US legalizes on a federal scale, they're going to be able to produce this stuff a lot cheaper than we can here in Canada, for a number of reasons, including minimum wage, benefits, access to capital, the labor market. The US has proven that they're more efficient and that they can produce products for cheaper than we can here in Canada. And I expect that to be no different in the MJ industry. So the fact that OrganiGram is already citing significant lower selling prices this year without the US competitive threat online is really concerning for me. Now, they also talk about revenue issues in Q2 due to the pandemic and a number of key players in their organization testing positive for the virus. Obviously, that has an impact on their day-to-day business operations, and they actually had to have a number of their staff isolate. So that one is a little bit more understandable because that's unique or specific to the pandemic, which is eventually going to go away. But the other one, in my opinion, feels to be more of a macro long-term trend. And if they're already seeing those selling prices go down, I have to believe that that's going to continue or get worse moving forward. Now, if OrganiGram is able to diversify, they're able to get into some of these other 2.0, 3.0 product lines like the edibles, chocolates, vapes, whatever the case is, they may be able to negate some of that revenue decline. But I think if they're really going to continue to focus on production of the flower itself, they're going to be in some trouble here over the next couple of years. And then go over to talk about cost of sales. So obviously, if they're producing lower product overall, but their fixed costs don't change, that's going to be a negative for the company. That then flows into their margins. So those are negative because obviously they have lower net revenues and higher cost of sales. So you can see how things can quickly snowball here if top line revenue isn't coming in as expected for a company. And that ultimately resulted in negative adjusted EBITDA for Q2 2021, which was actually a reversal from positive adjusted EBITDA in Q2 of 2020. So obviously investors really were spooked off by this, you guys, and that's why we saw that share price decline so dramatically over the last few weeks here. And if you jump back to their chart and you look at a 1 month view, you can see they were trading at 367 March 24th. And as rumors and news about these Q2 results started to leak out, you can see they continually downtrended all the way to 233. Now you are seeing them bounce off that low. So again, it may be a good opportunity to get in on this name, but that's definitely driven a lot of the downward movement in this share price in the last few weeks here. Now, if you jump back to the article and you scroll down to the bottom, they do give an outlook. So they do expect Q3 revenue to be higher than Q2, which is obviously a positive. They expect that a lot of the pandemic impact will be behind them at that point in time. However, they don't give specific guidance for Q3. So we will have to wait and see if these promises come true and if they are able to turn that revenue profile around and start driving some top line growth at this company. So overall, you guys, I think OrganiGram is a very unique operator in the Canadian MJ space. It's nestled right in the middle between a lot of those small cap companies that we've talked about over the last few months and then some of the big four multi-billion-dollar companies in this space. I think they do have some interesting things going for them, most notably this BAT agreement where they can really drive innovation. They've obviously got a well-established confectionery or edibles facility online now, and I think they are starting to diversify their brand portfolio. They do have great brand recognition, and they do have nationwide exposure with agreements in all 10 provinces. Now, that being said, the company has definitely struggled a little bit in the last few quarters. They've seen revenue decline, and they've been hit by the pandemic in a lot more meaningful way than some of the other companies we've looked at over the last few months. Now, if you keep in mind companies like Valens, Tilt, for example, they were actually able to grow revenue in the most recent quarter despite a lot of these global challenges. So to see OrganiGram post year-over-year declines is concerning. Now, that being said, the share price has been beaten up as a result, and that may mean that this is still a good buying opportunity or bargain if you look at it holistically. Just because a company has a few difficult months or a couple difficult quarters doesn't necessarily mean it's a bad company, but it is something that you need to be aware of and really weigh the pros and cons or risks as a potential investor. So for me, this is a company that I'm going to continue to watch. I have it on my current watch list. I'm not going to be buying any shares at this point in time, but it's definitely one that's interesting. And I do want to see if they're able to turn around their revenue profile in Q3. So that'll definitely be an interesting report to keep an eye on for me and could act as a catalyst for me to jump in or buy shares of this company. So that's it for today's video, you guys. As always, please make sure you smash that like button. It really does help get this content out to other people who may find value or interest like yourself. If you're not already subscribed to the channel, please take a second to do so. We just crossed the 800 subscriber mark, so we're very close to that 1,000. And I really wanted to thank and appreciate all of you who have helped me along this journey so far. Let me know in the comments section below what you think of OrganiGram, the strategic investment from BAT or Better Tomorrow, and if you're currently holding shares of this company. And as always, you guys, make sure you have a great rest of your day.